Markets only do three things. They trend up, they consolidate, or they reverse and trend down. That's all the market does. And your job as a trader is to identify what type of market condition we're in and then execute a plan based on that market condition. The hardest markets to trade are consolidating markets, but the best opportunities in the markets come after consolidation. That's when you get explosive moves. Whether it's continuation or reversal, it will always come after consolidation. And in this video right here, I'm going to explain exactly how that works, what you need to look for, and how you can start to trade breakouts, breakout retests, and failed breakouts based on consolidation. So let's get into the video. The first thing we're going to go over is very, very basic market structure because it's very important that you understand these key principles first. So what does a market do? It trends up, all right, like this. And when it gets exhausted and there's not enough buyers in the market and maybe some sellers come in, we start to go sideways, right? And it's at this point that the market needs to start making decisions on what happens next. And it's from this point that we need to be patient because we're going into consolidation and we can wait for something that's clear, such as a breakout. Now, where does a breakout happen? A breakout here can be trend continuation or it can be trend reversal. We can see right up here at the top, we have supply or we have sellers, whatever you want to call it. All right, this is an area of resistance, area of sellers. And at the bottom, all right, we have consistent area of demand. We have seen that buyers keep stepping in the market down here. We can wait for a trade setup to be a breakout or failed breakout when we see consolidation like this, especially on the higher time frames. It's really, really a key principle. If we are going to get a breakout, you will need to see a strong move with volume beneath where the buyers are. Now, ideally, you are either taking this as a breakout trader for a lower price, or you wait for a retest and then you're looking for a move down, maybe to come and sweep some liquidity, maybe to reprice a level, maybe to come back into an old area of demand. Now, a failed breakout on this area can also offer an opportunity. It's where sellers will get stuck. So if you fail to break this low, all right, maybe you sweep, come back inside, just like a Wyckoff spring, your then expected move is to go to the other side of the range up here. Now, from this point here, you're looking for the same principle, either a breakout or a breakout retest to go back in a continuation trend to the upside. These are what we're always looking for when we go sideways. And there's a reason I'm going over this week is because we spent 7 days in the NQ or the QQQ, especially in a period of consolidation where we were failing to leave the range. All we were doing was expanding the range. So let's get into that period of consolidation now and start to understand it a bit more. Hey traders, if you're enjoying this video, could I ask you to do me one massive favor? Make sure you hit that like button and hit subscribe. And don't forget, I'm here streaming live for free Monday to Friday from the New York Open all the way into lunch. If you really enjoy this video and you want to learn more, you can of course do the Flow Zone Trader course. I'll put the link underneath in the description. Let's get back into the video. Now, I've rewound this just a couple of days in the market so that you can see what I'm looking at. Now, the first thing you need to do is zoom out, understand the trend count and where we are. If we think about this using like a 1 MA or something like that, very, very simple. What did we have up here? Okay, we had very clear level of consolidation. All right, here is our supply. This is where sellers came into the market. Buyers failed for us to move outside of this. Here at the bottom, right, we had a level of demand. Okay, we'd do this as blue. And you can see for a long period of time up here, you could even put this further back if you wanted. Let's consider this inside. 1, 2, 3, 4, 64 days we spent in consolidation. Now, yes, the range is big, but this build of 64 days of consolidation meant that lots of buyers kept coming in, attempting for the breakout and failing. Shorts were coming in, attempting to the breakout and failing. And inside here, you have a huge buildup of volume. And that's what you need to understand. The longer we go sideways, the more volume will be in that area, the more pivotal it becomes. So what happens when we eventually break out? You have this nice breakout bar. It's the first red bar that you get closing under the lows. The next day, we trade back inside the range. Here's your failed breakout. We trade inside the range. We peak up on a further day. And then finally, we offer the continuation setup. And once we start to leave this range, all right, we're constantly then thinking about sell continuation because we know buyers are trapped up here, which is why this move here becomes so pivotal. All right, once we leave the range, we can think about a fib leaving this range, all right, and we pull back inside towards the 50 and we find a bear flag rejection versus where the buyers stop were. Remember, buyers here, this is their stop out. They get liquidated. They get the chance to get flat. If they don't take it, they have one more chance to get almost break even. And then we leave and start drifting away towards the 161. Okay, so very, very powerful, very, very simple technique. You can see this play out time and time and time again in the market, and it's fractal. It's something I'm going to go over later. So coming into this week's price action, what do we have? We're in a strong uptrend here on the daily, but we're coming into what? Into this old level of consolidation. We know that up here, buyers, they're trapped. These buyers from the beginning of the year and end of last year, they're currently trapped. So we don't expect the market just to want to trade straight through it. It's going to need to pull back. Now, we're fairly extended in terms of range. If we think about the count, there's your first leg up, pullback, first leg up, small pullback, first leg up. At this point here, we are expecting some form of pullback, aren't we? We're not expecting a straight breakout to take out all-time highs, especially when you look at the macro environment. We're bullish, but we expect a pullback. So the pro trend is up. The counter trend, as I would call it, would be a daily pullback, ideally into one of these levels here, and then we're going to look for a continuation trade upside. Very, very simple, all right? Very, very simple. So when we zoom in to this level here, we understand that there's supply to the left. We can start thinking about what we're looking at here. Now, we have consolidation here, and we also have an expanding range. So here is your megaphone pattern. These are the most horrible patterns to trade, but they're there and they're there to build liquidity. Once we get through this megaphone pattern, we can then identify where sellers keep coming in the market. So sellers keep coming in the market up here. You can see these wicks on the daily. This is where sellers are entering the market. And down here, this is where buyers keep trying to absorb the market. And on top of that, you have this dynamic megaphone. This is your support down here and resistance up here. So if we're going to get a breakout trade, a breakout retest trade, which trade do I prefer given where we are looking at the macro picture? I would much prefer the downside move here, all right, for the counter trend move, maybe to fill this old gap up, maybe just to fill this imbalance, maybe to run these stops here. Right, that's what I'm looking for when I look at this chart. It's what I was looking for all week long in this last week. Once we've done that downside move, I then know we've got liquidity here. Once we finish the pullback, this then becomes more probable, but we're going to have to wait for the market to build liquidity for that. So I'm looking for a breakout trade or a breakout retest trade where these bulls in this 1, 2, 3, 4, 5, 6 day range get liquidated. Remember, if buyers keep stepping in here, when they eventually get liquidated, they become sellers. That's when I can think about the trade down to here, maybe to fill some of this imbalance, maybe into these key levels. So let's move forward. The next day, what do we have on this day? Now, a lot of people are going to argue with me and say that this is not an inside day. This is what I call an out to inside day. These are not nice days to trade. Why? Because we have opened up inside the previous day range. We have wicked outside, and by the way, we have only done it on the NQ. It did not do it on the ES, and it did not do it on the QQQ. So you have divergence of cash players. This is something I talk about extensively in the room and in the course. It's more advanced kind of technique here. But you have divergence down here. We go outside to in. When we go outside to in, what does that mean? Probably shorts are trapped down here, and probably we need to build more liquidity. So we expect choppy action. When we are inside the previous day's range, we expect choppy action. When we're inside the previous day range, we expect choppy action. When we are inside this part here, we expect choppy action. This part here, we expect choppy action. When you zoom out and you're looking at this bigger right now, you have this bar here. We go from outside, outside, in. This bar here, pure inside. This bar here, outside, in. This bar here, outside, in. This bar here, outside, in. Is chop. Okay, these are conditions you don't want to really be looking for trend trades in. You need to wait and let the market build liquidity. I'm going to show you the divergence now very, very quickly so you understand what I'm talking about when we're looking at cash players. This same bar on the QQQ, which just shows you the New York players, you will see that not once did this trade outside in. It's a pure inside bar. All the New York players, which is where most of the volume in the market is, are just getting chopped up here. That's why it's an inside day. Not once do we expand the range. Let's go back to NQ now. So we have an inside bar. This means to me that we're still building liquidity. And when I zoom out and look at this, I'm thinking about my S&R levels. So where do I now think buyers are trapped? Right now, I'd say the top range up here, the buyers are absolutely trapped up here. Now, if you know your stats, this day here on Monday, all right, more stocks, more commons and more ETFs were bought by retail than ever before in the history of market in this day. Where did we close this day? High. Where did we close the next day? Lower. Where did we close the day after that? Lower. Where are we this day? Inside. Who's stuck? Retail at the highs. This is a good signal that there's a strong chance when the market's ready, we're going to give that pullback because the market likes to liquidate retail traders because when they get liquidated, they stop out, stop out, stop out, stop out, and they provide the opportunity for smart money or investment banks and hedge funds to get long for cheap because smart money doesn't want to buy up here. It wants to buy in discount down here. And it's that retail that will allow us to buy in discount. If you need confluence for something about where people are trapped, what can we do? We go over it lots of times. You could use something like a TPO. We put this on and we will need to move to a 30-minute chart and zoom out. Okay, and you can see right here at the top, we have a lot of volume and we've traded then the next day down and the next day down. Okay, so volume is trapped up here and we are walking price down. So all the time I would say we reject 280s. Then there's a strong chance of a move lower. And this day here into 190s, strong chance of a move lower. So it's important to understand the confluence. If you can't see the price action, use some basic principles like a TPO or like a session volume profile. Make it easy for yourself. Learn to see who's stuck in the market and where they're stuck. Because when you understand who's stuck in the market, it gets much easier to take breakout trades with confidence. So I'm going to go down to lower time frame now to look at the day where we got the breakout into Friday. All right, so let's move down into a 15-minute chart here. And we can start printing some of our levels. All right, so we're going to move this demand section along because we know that's where buyers keep stepping in. That's the current low, all right, in this range, which is an expanding range. And beyond that, we can just mark out some potential levels of interest or liquidity where the market might want to come and look towards and search towards, because this is where, right, the origin of the move is. If we think about the weekly model, if we think about here's Friday, here's Sunday, here's Monday into New York, and there's the gap up. All right, so this level here is going to become a key level. That's where we started this weekly move. And in this week, we've gone sideways. And if we're going to get a breakout trade and trap all these buyers, we're expecting the move back to the point of origin. So we can see now where demand is, all right? And we can also see some key levels as we start to look across. Where are potential sweeps if we're going to move higher? Say this level here becomes very, very key. And we can just let this build out as we move into Thursday to Friday. All right, so let's just get into the Asia session and see what we see here. Okay, so instantly here, I'm already looking at this now. and I'm identifying that this here and this here and this here are starting to look like a head and shoulder. This looks like a breakdown. Here's your strong kill candle. There's the reprice in, and we're getting continuation lower. Now, I actually took this trade live in Discord with my team. We identified this trade and we played it in Asia, all right, for a move lower and locked in some good money. But if you are up long enough through Asia and London and into the New York session, you got the breakout trade. Now, let's just keep playing this through. And you can see we're just making lower lows and lower highs. Some sideways consolidation, and there's the break. All right, so where can you take this? Well, if you're up here and you want to take this break here versus 180 is great. But where was the classic break that you could have just run this? Right here. All right, right here. This is where all the stops are for this whole range. Think about everyone involved in this market from Tuesday, Wednesday, Thursday into Friday. Finally, we get the breakout trade. The clue was up here. Now, ideally, we would have swept this liquidity first before trading lower. We didn't do it. We had divergence. But there's your pullback. Here's your trend. There's your pullback. We're thinking about that continuation trade. And if you're not already short, this is your first opportunity for a breakout short, because you know everyone is trapped inside the range. These are strong probability breakouts, because when we look left, we already know there are strong levels of supply on daily and weeklies here. We are due a pullback and bulls are currently trapped in the market. That was your opportunity to take a short breakout setup. The other key thing is to note where we go to. We take out two key levels of liquidity as identified from the point of origin on Monday. If we think about Monday morning, we go to the 9:30 print right here. All right, here's your Monday morning New York print. It's right there. We've traded all the way back to the cash open on Monday. Key levels. Why in the group we mark out 9:30 opens and 4 o'clock closes. Cash is king in the market. All right. Anything outside of that is a little bit of noise. What else did you have here in this consolidation? You had a breakout of Globex. Now I'm going to make it really easy and put my indicator on here. So there you go. These orange lines are the Globex levels, and you can see right here. Here's your breakout. There's the retest. There's your short opportunity for your bias for a continuation trade downside for that breakout. All right. This is your classic outside move. We're moving from inside range to outside, and we expect that to hold and stay firm. Now, the unfortunate thing is, after this move's done, there's not much else to do. We're now really waiting for a pullback to get short. Now, where are the opportunities for the pullback? All right, it's probably going to want to balance back into some of these levels. And at that point, we have to think about if there is a continuation trade back down to retest the lows, or if we get more of a V-shaped bottom and a full recovery, and then we go back to the upside, because this will be a failed breakout on a daily point of view. And if we're going to do that, we're going to come all the way back up for these highs like we went over at the beginning of the video. So let's see how Friday plays out, and then we can make thesis for what might happen next. And as you can see, we offer a 2-leg pullback. 1, 2, right to where we broke out from. Remember, this is now supply. This old demand, we can narrow this down. Where the buyers came in, we expect them to be sellers, okay? Because if they did not stop out at this level, if they held on for dear life when we return back in, we expect that to hold as supply. And you can see 2-leg pullback. That's a classic pullback after a breakout. And then we find sellers in the market. Now let's look at this from a fractal point of view so you can understand how frequently we can use inside bars, because it's not just on weekly and dailies, it's on every single time frame. The first key thing to identify is the area we're trading in. Okay, we know there's supply up here. We come up into this range. We know it's a range we're interested in, the red box, and then we go sideways. All right, this is pretty much sideways action. We'll just do this as gray. And if we were to think about a moving average here, it would look something like this. Up, down, down, sideways, up, down, sideways. And it's this bar here that piques my interest. Why is it this bar? We have support here. We know that there's structure here, but we know that the higher time frame level is right here. This bar here moves away from this level, and the next bar after it is what? It's an inside bar. So at this point, you have a couple options. If we're going to move upside, you want a print outside this bar for confirmation of a trend up. But the moment we print outside the lows of this bar, the moment we protect the highs of this bar, we are likely to do what? Have a downside move where we liquidate the bulls in the market. You'll see it over and over again, even from this reversal point. Here is your range. This bar here closes outside. There's your tap back in. This is your buying opportunity. Close out, tap back in. There is your reversal. This bar here is what? It's an inside bar. This white bar is inside the previous bar. Once we break out of this, what are we expecting? Upside moves. Buyers stepped in here. It gets confirmed as we drift back in. Confirmation of continuation. Understanding the power of inside bars is really, really, really important. Understanding the power of ranges is really, really, really important. Always think of an inside bar as tight consolidation. It's the building of liquidity. At the top side of that, you've got shorts, and their stops are right there. If we take them out, we explode upside. The bottom side of that, you've got buyers, and their stops are right there. We go underneath that, they get liquidated, they become sellers, we get downside pressure. Understanding who's trapped in the market is absolutely key, and it's fractal. So your job right now is to look at the weekly, the daily, the 4 hour, the 1 hour. Where are your levels of consolidation? Once you identify those levels, you know that's a range that you probably don't want to be looking for a trend in. But outside of that range, you're either going to get a trend continuation or you're going to get a trend reversal. And both of those can be explosive moves. Thanks for joining me today. I hope this video has helped you identify market structure and will help you stay out of choppy markets. Remember, when we're in consolidating markets, you expect liquidity to be built, which means you're going to see a lot of traps and a lot of range rotation. When we move outside of that choppy action, we're looking for breakouts, break and retests, or failed breakouts for reversals. So next week, maybe you can put some of these lessons into play. I'll be back real soon for another video. Until then, hit that like and subscribe button.